Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. Now, as always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using in this stream are linked in the video description down below. So the broker, the charting software, the strategy I'm following, and so on. And the one thing I truly recommend if you haven't done so is check out the Elliott Wave principle, which you can read online for free when you use the link that's down in the description below. That said, let's jump right into it. As you can see, today we have a slightly, it's again a break-even start into the day with, in this case, a slight positive start. Yesterday it was a slightly negative start, so we're still hovering around 11,300 euros in this portfolio. Yeah, we were already a lot higher for the year. I think the return so far is a little bit above 30% since I migrated my portfolio to Interactive Broker in the middle of May. Now, Akashi, hi, great to have you here. I hope you're having a great day as well. Where do we start? Let's check Motive Wave. The first thing that's open is the NASDAQ, where already based on the labeling from yesterday, so we can see here, or not just yesterday, 23rd, today we have the 24th, so yesterday we actually went further down, so we had our stream yesterday somewhere, 22, 23, that's 15, okay, that's where we started yesterday. We actually had the labeling like this already yesterday, that we should be able to go down here, so we apparently are correcting at least this. Personally, I think it might be a potentially good entry point. I'm not sure which way we're going to gap today. I didn't have time to check any kind of pre-market information or so because we had some visitors. Yeah, so either way, I think based on the pattern, it might be that we're looking at an ABC pattern here, which would then be followed. And we reached the 61.8 retracement here, barely broke it. And so I would expect the most likely outcome would be that from here we actually get some upwards movement for the next 5 waves up. It's also possible if we were to gap lower, then we would have to consider that we are actually retracing this entire thing at least. But yeah, right now it looks more like we're only retracing this pattern here. We retraced 61.8%, and from here we should get our next 5 waves up. Now markets are already open or not. 30, 36, so they are already open, so we should actually receive some update here. NDX is slightly up, so yeah, no new candle. Let's clear the local data. Let's see if we can get a new candle. Yeah, Logitech update, not relevant for the stream, so no new candle. So here 23rd, where's the 24th? Our market's open today. Somehow it seems there's something missing, so should be open because we're getting some data here. Yeah, so yeah, I haven't memorized the holiday schedule. Anyway, let's take it from the top, considering the relevance in our portfolio. Now my mouse disappeared. Great, thank you, Logitech. So I'll have to wait for that stupid update to go through so my Logitech mouse shows up again. Thank you very much. Yeah, so there it is. There we go again. So we can close this. And so as said, starting with relevance. So we have still our Novavax exposure, our GameStop covered calls that expire this Friday, Novavax end of January, grab for January 26. And then we have shares in a few different stocks, the relevant ones that are not, long-term holds to see what will happen would be COS, Immersion, and Barnes & Noble Education. The SunPower, Greenwave, and Faraday Future positions are kind of, like things that went wrong and that we're just waiting out to see what happens. Although SunPower has declared bankruptcy, so we're just waiting for them to actually be officially declared worthless and removed from the portfolio. So yeah. Anyway, so let's start and take it from the top. Let's start with Barnes & Noble Education. We had our breakout, so from the bigger pattern we assume that we have an impulsive pattern here, a corrective pattern here, and ideally worst case only a corrective pattern that should take us between up to 1420 or 1976, or best case we're actually looking at the next 5 wave impulse up. Either way there should be more upside there. If we're looking closer, we can see that we had a breakout after this apparent 3 wave corrective pattern that took us down to also 61.8, similar to the NASDAQ. And we are right now most likely in a 1, 2, 3, 4, 5 move. to generate or build the next impulsive pattern upwards, which would then be followed by a small correction and then be followed again by the next upside or upside move. Which means, well, it's possible in the short term that we go a little bit down. As long as we don't break this deceleration channel again, we should now be in the fifth wave. And if this is, oh no, not in the fifth wave, but wait, so like trying to, it's always hard to recall everything that I shared previously. So working on that to get some better notes on what we have. So here we have 1, 2, 3, 4, 5, and then here we have ABC retracing to the 61.8 retracement and to the area of wave 4 of the previous impulse wave of 1 lower degree. So 1, 2, 3, 4, that's the lower degree, and wave 4 is this area that we reached here. Now here we have the ABC. So either we are only getting 5 waves more, which again should take us to 14 or 19, or this is only wave 1, 2, and then we're actually getting wave 3. So yeah, not wave 5, but wave 3. However, as long as we stay above this deceleration trend line, we should be good with our analysis here, and there should be more upside. That about sums Barnes & Noble education up. Again, profit targets would be at least 14.9057. Actually, a little bit more, because even if this is a corrective 3-wave move that's followed then by a further downward move, we would expect it to make a new high. Yeah. In the perfect scenario for a corrective pattern, it would reach the 1976 mark on the 11th of December. We'll have to wait and see if that actually will come true or not. But so far, no matter how we label it, there should be upside here and potentially more upside than this as well in the long term or longer term. Moving on, next thing, Grab. Grab broke the high that we had here at $4.04. Yeah, basically this week. We're looking here at a weekly chart. From the looks of it, this will turn out to be the next 1, 2, 3, 4, 5 to finally give us something like 1, 2 or 1, 2, and then we are in the third wave to the upside slowly. We have our call expires here in January 26, so we have quite some time left to actually make it higher here and get a decent profit from that small trade as well. But it's still gonna take some time. Now, yeah, let's start immersion. Immersion, we're still waiting for, ideally, I mean, we have a breakout from this deceleration trend line here that could point towards finally our correction is over. We got it slightly wrong here, assuming that we will finish around the 61.8 retracement, which also marks the 100% expansion level for this 3-wave move. And we went a little bit further than expected. Visually, I would expect another push down, potentially a little bit lower, to make this a 5-wave move, although it could already be a 5-wave move on a lower time frame. So on the daily chart, it looks like there might be another push down possible. However, it's also like chances are 50-50 in that case that we already finished the correction. Either way, I think this area here is not too bad for potential entries, because even if we go a little bit lower, the risk is limited. I mean, let's say 5 to 10%, whereas the upside would be quite huge with maybe 100% upside over the next couple of months. In immersion now, in costs, yeah, we'll have to wait and see. Pretty much unchanged. We didn't break the high that we would have. So the high here at 879, that would be something we would love to see, to have some kind of confirmation that we indeed finish the corrective pattern and are in the next 5-wave impulse up. Until that happens, we still have the possibility that this is only part of the correction, second part, and the third part will or could then take us lower. So yeah, for existing positions like the one that I already have, I consider hold to be the right strategy. As far as entering goes or so, one could wait a little bit and enter if or when we break 879, or if one wants to be even on the safer side, one would have to wait for breaking the 1055 here, which would then more or less provide extra confirmation that we should see more upside here. Now, with that, we have immersion, we have cost. Now, we covered Grab, we covered Barnes & Noble Educational. Then obviously relevant GameStop for us, since we have a relatively big exposure in our portfolio to that. We originally got 500 shares assigned by writing puts at the $30 strike price. made quite some money from the premiums. We got them assigned. Technically, if we consider the premium we received, our average would be at 24. If we don't consider the premium, but consider the strike price, then it obviously is at $30. Now, nothing changed here since we're also looking at the daily chart. We still have both options that either we first go down to 1530 and then we make our pattern further up, or our correction actually finished here at 1809 and we are already in the process of making our move further up. Sadly, the only solution here is to actually wait and see. Similar to other stocks we just covered, entering right now might not be the best spot yet. It might be possible, as said, if the downwards projection becomes reality, then it might be possible to get a 25% better entry. Existing positions, I don't think it makes sense to sell them at this price. Even if we were to drop 25% here, after that I expect it to go further up, but again, that's just my personal opinion. Now, Novavax, the one thing that we are waiting and seeing, and we're partially wrong, and which serves as a reminder to set trailing stop losses once you're in profit. For those of you that already are here for quite some time, yeah, actually time flies. So actually on the 8th of August, so more than 2 months ago, based on this spike, we actually got call options here, assuming that this is A, B, C, and we're now in the next 5 wave up. Obviously, those call options were in profit here, 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 and then we got this dip down, which brought them into a loss or into a negative area, pending loss. We got new call options. Well, actually, no, we wrote call options against that at a higher strike price because our assumption is that we should get a further upwards move. However, we expect that upwards move to go to $28.84 or at most around $50. So we wrote $45 calls against our $20 calls. So if we are right and we go up, then we kept our maximum profit. However, we kept it at a point that we anyway consider secondary target, so less likely to be reached. Visually, however, nothing changed since yesterday's episode. I still believe it's possible that this will be 1, 2, 3, 4, and that we get another push a little bit lower, maybe to the 61.8 retracement. While I think long-term there has to be another push up based on the pattern that I see on the chart. Short-term, it's possible, as said, that we first go to the 61.8 retracement. The big question for my personal positions here is only, will all of that happen in time for the expiration in January, or will this drag out too long and we will not see the upwards movement in time? So, which is obviously the downside. So while options offer you with a limited risk, depending, not all of them, but some of them, so buying call options in this case, the only thing we can lose is our premium. Even if the stock becomes worthless tomorrow, we only lose our premium, and therefore, compared to holding shares, have a clearly limited risk or lower risk. However, we have to consider the time factor, because if we would have bought shares, although at this price we would have only gotten around 20 shares for the money that we paid for the options. So obviously, if the price moves sideways for some time, we still would have the 20 shares where the option would be worthless. On the other hand, if we reach our profit target, each option represents 100 shares, and therefore the profit that we can walk away with if we reach the target is also higher. So there are scenarios and situations where options are the better play. There are obviously also, however, some downsides attached to it, where if you're wrong, the option is worthless and your money is gone, whereas your shares are still there and they still have some value. Now, either way, so I think, as said, while the moment we broke that low here with those spikes, it became possible that we actually will get to see the 61.8 retracement. However, it doesn't change the overall prediction that this likely is 1, 2, 3, 4, 5 for a wave 3, actually, for a 1, 2, 3 and a big wave 4. And the only question is when this wave 5 will start, in my opinion, unless I'm completely wrong and we just go down from here. Yeah, if I'm not mistaken, COS will announce their earnings today, which probably after market, if I'm not mistaken. Do we have a notification here? No, I already marked it as red. Yeah, so it will not show up anymore. Yeah, it doesn't show up anymore. So depending on how that goes, we might see a big spike that either provides us with final confirmation that we're now indeed getting the next wave up, or a break to the bottom to point out that this correction is not finished yet. Moving on to NVIDIA. I think our NASDAQ data feed has some issue because it's not updating, by the way. Yeah? So I'm gonna, 1 second, trading view. Just double checking NASDAQ. Oh, there it says delayed, so it will take 3 minutes for the data there to update. Full chart. Yeah, so anyway, NVIDIA visually looks like 1, 2, 3, 4, 5. So like we get another push down. We only retraced 21.4% so far. While it's possible that this is the entire correction and that we only have been correcting this minor move here, as we can see here, in which case we already would have reached the 38.2 retracement. So it's possible that this is ABC and we're going up from here. I think it's more likely that we're actually retracing now this entire move. And if we're retracing this entire move, I'd expect this to be 1, 2, 3, 4, 5. Then we get ABC, and then we get another 5 waves down to reach the 38.2 retracement at 133.12. As I said, right now I consider this the more likely scenario. Yeah, moving on. I think with that we can actually already move on to SPY. Yeah, there. 1, 2, 3, 4, 5, ABC. 1, 2, 3. It's actually possible that we have our low here. So we have a drawn out wave A followed by a sharp wave C, or short wave B and sharp wave C. It's actually really possible that we finish the correction and are now in the next waves up. In which case, yeah, let's see if we exceeded. Yeah, we reached exactly the expected maximum for wave C. So while it's not, so while we cannot completely rule out that this is just somehow the beginning of the whole corrective wave, maybe then this, but then we would correct too far overall. I think that this here tracks as A, B, C, and we are now in the next 5 wave impulse further up. We're gonna have to keep an eye on that. And yeah, we don't have any exposure right now. Technically, one could go long from here. Stop loss would need to be at the low here at 570. Oh no, what do we have as low here? 574.41, which is 1% is 580. So it's actually less than 1% risk. Am I doing the math right here? 10% is 57. Yeah, 1% is 570, 580. So for me, it's actually less than 1% risk, and the upside would be more than that. So probably would have a 1-to-4, 1-to-5 ratio. Question is obviously, until it happens, we clearly have a corrective wave happening right now here. And so while I not necessarily would want to enter right now, but more maybe at 578.60 to 577, that would be potential entry points for a long position with the stop loss set at the low here that we have at the, let's not cancel that alert, that we have at 574.41. So at the low here, I think it's not the worst possible trade. Looking at this, however, I would say the best entry would be at the 577. From the looks of it, this is 1, 2, 3. We might bounce here for 4, then we get wave 5, then we get ABC, and then we get another 5 waves down that should bring us to 577. So that's just visually what I see here. I might be wrong, but I think I said 577 would mark a good entry here with the stop loss at 574.45. Yeah, right now one could, if one wanted to go short, stop loss would need to be at the high that we had here at 581.21. And then, however, take profit is a little bit tricky because it could be any of those retracement levels or none. So personally, I would rather wait to see how this plays out and then enter for the long position with a set, a very, very short stop loss and a decent upside. So that's about SPY. And as said, the NASDAQ now is actually gapping to the upside, confirming or providing additional confirmation for the assumption that this might be ABC, bouncing at 61.8, and from here we are going further up. Yeah, if someone would have kept an eye on that yesterday, we already labeled it yesterday and provided the target areas at 19,956 to 19,982. One would already have made an acceptable profit because, as we can see, we are now at 21,200 or 21,109. No, 200. So yeah, it's like because we are so close to the whole thing. So we are now here. So we can see an entry yesterday here based on the predict, or even on the first predicted target level would have offered already a decent upside. Sadly, I did not see that. I did not trade it because our funds are already tied up. But I think this will turn into one of the situations where even if I'm wrong in the longer run, in the short run, one could have followed the prediction, entered here, and then just use a trailing stop loss or put the stop loss in a profitable spot to basically make sure that the trade doesn't turn south anymore. Now, there is obviously, depending on where you trade this, and if you're trading the futures, which you can trade 23 hours per day during the week, or 23 and a half even, there's obviously overnight risk, even if you have a stop loss. But overall, I think this will likely turn into a correct prognosis where we go up from here. But even if I'm partially wrong, it would have already been a profitable trade. And that, ladies and gentlemen, already sums up everything for today's stream. As so often, not much to do other than wait and see. I'm going to zoom in here a little bit more so we actually get a chart that's more relevant or concise. So this, so a lot of positions where Akashi, Olga did not show up today. He's not here every day, so it's nice when he's here. It's also sometimes, of course, that he's not here, but I think there's not much to do but wait and see. And overall, I have to say, so I shared it earlier already, it's obviously a little challenging because the movement that we have in the portfolio is not that big. I think the performance that we have in this portfolio so far is still better than average with 1 second. How do I switch that? That's value, that's performance. -12. So plus 29% roughly for the year. We were already up much more, but again, then we got the shares assigned and GameStop dropped in value a little bit, which is a kind of like pending loss that's dragging us. But still, for basically since the middle of May, having an almost 30% return, definitely not bad. But however, compared to what I did before, it seems like movement is very, very small. And even compared to what I did the first couple of weeks when we just wrote put options on GameStop and pocketed the premium, it's also obviously slower. And we've been moving sideways in the portfolio since August 5th now. So it's like basically a little bit more than 2 months that we've just been moving sideways. During the time, however, we got some option trades that worked, some that didn't work, which we paid for with option premium. And we also got an additional 10 shares of GameStop, which we paid for with option premium. So I think eventually, even if temporarily we are looking at a loss, if GameStop indeed goes down to $15 per share, I think that in the long run, we actually will still look at a more than decent yearly performance here. But even for me, it feels like it's going slow, but we'll just have to wait this out in terms of, especially the GameStop position, we'll have to wait out. And let's hope the waiting is in a time frame that we can consider in months. So to actually, get the push up here, which gets our shares called away. We free up the capital and basically lock in a specific profit and have some extra shares that we paid for with premium. But until that happens, it's going to still be slow going, and we only can make smaller plays in other positions because, again, a lot of funds are locked up here in this position for now. Anyway, Akashi, thanks for stopping by. Whoever lurked in between, also thanks for stopping by. Don't forget to like, subscribe, enable notifications. I hope you were able to take something away from today's stream. Personally, I would consider, as said, like preparing entries for SPY, maybe making a small entry already, but from the looks of the smaller 15-minute time frame, I think we should get to see 577 in the upcoming days as a better entry point, and with like smaller risk and then bigger reward. And other than that, there's not much to add. So with that, as I said, don't forget, like, subscribe, enable notifications, and then we'll see each other tomorrow around 5 minutes before markets open for another episode of Daily Market Mastery. Thanks for stopping by. See you then. Till then, bye-bye.